Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, including important news from Australia. The Australian government has unveiled its 2013 budget, including $43 billion in spending cuts and tax increases over 4 years to pay for its key education and disability reforms, and to fund a belated return to surplus in what is now the last big roll of the dice before the ALP goes to the September 14 election. Two of the big credit rating agencies have held Australia's AAA rating. But at the same time, prominent economist Ross Garnaut has warned Australian policymakers that they need to make immense adjustments if the country is to avoid a deep recession brought on by the end of the China resources boom. BHP is cutting back in an ominous sign. The Aussie dollar is falling quite fast and the Kiwi is going with it. In the bond world, the risk scale is tipping towards greed as investors chase yield without concern for risk. Animal spirits are alive and well, some might say. Others have suggested a modern update, though: market jungle juice. In Europe, the appetite for yield was all too evident, and nowhere more so than in Spain. It sold 12-month bills at a yield of less than 1% for the first time since April 2010, and a new 10-year syndicated benchmark bond priced at 278 basis points over mid-swaps received bids of around €20 billion. And Spanish oil firm Repsol yesterday sold a 7-year bond at a yield of just 2.72, yet another sign that demand for bonds remains amazingly strong, regardless of the risk. Investors are clearly confident that central banks are no nearer to turning off the liquidity taps. In the US, the stock market is powered to yet another new high. It was boosted by data showing US households have now deleveraged to 2006 levels. US import prices also fell, keeping inflation in check. And as we have noted before, the US federal budget deficit is falling faster than anyone expected. And finally, the days of key German influence in the EU may be waning. The ECB has clashed with Germany over how the EU will handle struggling banks and whether to create a common agency to fund and manage failures. New Zealand dollar starts today at 81.9 US cents, tracking the Aussie dollar lower, 82.9 Aussie cents, and our TWI now stands at 77.0. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.